Alrighty, hello everyone, and welcome to TradeFinder Live. Great to be back with you all. Hope everyone had an enjoyable holiday week or holiday weekend, that is, with family and friends. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. Main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Other than that, lots of exciting topics to get into for this session. Excited to get caught up on a full week of trading as we've had a lot of holiday shortened weeks as of lately. So without further ado, let's get right into it. Rob, you out there?
I am Zach. Hey everyone, welcome to TradeFinder Live. I echo Zach's sentiments. Hopefully you all had a great holiday weekend. I did as well. Zach, I know you're still traveling, so appreciate you taking time out to be with us today and facilitate this meeting. We're going to go ahead and take a look at the market. Obviously the news is over the tariff stuff. Again, it does seem like it's weighing less and less on the markets. Monday night, President Trump said that the August 1st move out date was open if countries called and wanted to negotiate seriously. And then this morning he says, no, August 1st is a hard date for those tariffs. So we keep getting the mixed signals regarding this. We all know that it's a negotiating ploy. But it does play havoc on a very short-term basis. You can see the intraday volatility that we get in the futures market when the comment comes out. It's just wild-looking charts, the way it goes sort of like this on anything that occurs. But what we want to look at is the bigger picture. And as I've mentioned, talked about this in the last couple of U.S. market updates. Hopefully you've watched those. We started back at the February highs with this really classic zigzag to the downside that went right to the 161.8% extension. We started with a zigzag to the upside. As you know, if you've been listening, all 5-wave impulse patterns start with a zigzag. Not all zigzags turn into 5-wave patterns, but every 5-wave pattern starts with a zigzag. And we had a bunch of them. 4 zigzags here, 3 within the C wave extension, creating a very complex C wave with the addition of the triangle. I know a lot of you have heard this already multiple times, but we've got new viewers as well, so keeping everybody up to date. And then we had this conglomeration of where all the C extensions were at the exact same spot. So we have C here, 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 and here. So they're all conglomerated right at those February highs. So that's where we thought we were going to go, and that's where we went. So we're there now. What happens at this point in time? Well, in the meantime, the AI signals from the Hub organization, and I would assume all of you have a copy of the Hub software by now. If you haven't, you can go to hubb.com, get a copy of the software for free, and you get the LA Wave for free. You do have an opportunity to subscribe to these AI signals if you'd like. You don't have to. You can get just the free copy with the free LA Wave. But the AI gave us a signal on the SPY of a target at 652. It's only a 62% score. So it's not, we like to utilize that at evotrader.com to send out alerts on signals of 75 or above. So 60 is a little bit lower, but it's more than a toss of a coin. The AI is giving it that percentage chance that we see 652. Now, on the financial networks this morning, there were a lot of market pundits that have come out and they've moved their targets somewhere 660, as high as 690 by the end of the year. So a lot of people starting to raise their targets as it shows that things haven't been as bad as expected. So we had this little bit of a gap up and we had here, hopefully you can hear me a little bit better now. Let Zach know if you're having trouble hearing me. This is, I've got the dial as high as it can go. So right here we have this gap up that we had at the end of last week. And then we came back down, filled the gap nicely yesterday, kind of a ho-hum day today. and here's the 10-day moving average. So we're continuing to creep above that. Really good consolidation, actually. It did leave a little bit of a doubt with the fact that we had 4 C-wave extensions all at the exact same spot, knowing that that was the likely target, which we hit. But do we continue higher? The problem here is you can see all of these fib extensions that are in the way, and Fibonacci ratios act as support and resistance. So on the way up, they act as resistance. So the fact that we're moving to an extended C wave and every one of these zigzags, they all have different extension targets. So it's going to be quite a bumpy road, I think, to get to the 652. I don't think we're just going to fly up there because any of these could act as resistance. Some of them likely won't. We're not going to hit every one and act as resistance, but you can see that there is some bumpiness in the road, if you will, from where we are up to 650. The economic data showed that the annual inflationary number was 2.4%, and that's creating a lot of ire with President Trump. The Fed's number is 2%. They want inflation down to 2%, but a lot of people feel like that's not achievable, that's a bit of a pipe dream. And even the Fed at one point in time said they'd be okay with 2.5. Well, now we're at 2.4, and they're still not cutting rates. So you do wonder if there's some politics behind the thing. I mean, if I was Chairman Powell, I wouldn't like being called names either. We talk about this in the platform, the social media aspect of the platform. Zach will talk about that at the end, how opposing views make markets, and people disagree. But let's do it in a respectful way. Name calling, I don't think, is necessary. And so let's respect each other's views and acknowledge that we could differ in our views. And it doesn't mean one person is smarter than another person. So anyway, enough of that soapbox speech. So that's the way I see things right now. Is there's a potential to continue higher, but we could have a little bit of volatility on the way as we bump back and forth. In other words, I don't think that we're going to go up from where we are to 650 the same way we went from this B wave up to this wave 3 level here, where it was just straight up. I don't think that's going to happen. I could be wrong. It could happen, but with all those Fibonacci levels sitting out there to act as resistance, we'll see how things play out. So talking about inflation, et cetera, a couple main things that we need to talk about. First of all, let's go look at the bond market and TLT. We've shown this trend channel here, and this should be a little bit worrisome. We've broken to the downside out of the trend channel. It did what it was supposed to do. As a quick reminder, when you have a zigzag complete, which this one did, right at the 100% level. So once again, there I'll use this arrow, right at the 100% extension. And that was an extended level because we had a 38.2% B wave correction. So we came down to 61.8, bounced up, right back down to 100%. Very classic. That's the way things usually work when you have an extended C wave. You bounce back, test the previous fib level, move to the next. And then we started moving back up. So when a zigzag completes, you retrace the C wave. That's what normally happens. And we did. We went right all the way back to where that B wave was. Now, once you do that, if we're going to continue in that mode, if we were going to continue in this channeling move to the upside, then the next step would have been to have retraced the entire zigzag, not just the C wave portion, which meant that there was a possibility that we could continue up here towards that 90 level. That's where that arrow was I was talking about over the weekend. But you can see to start this week, we've broken to the downside out of this trend channel. And a quick reminder, TLT's prices and yields move inversely. So prices have gone down. That means yields and rates have gone up. And yet the market's hanging in there relatively well. We did move down yesterday, but we needed to fill that gap from Friday or Thursday. I could have said Friday. My apologies. Market was closed Friday. It was Thursday. We had that gap. And then today we're just kind of going sideways. So you could argue that considering this move down in prices and up in rates, the market's actually hanging in there pretty well. I'll look at TNX real quick because I know a lot of you make comments that you like to look at the 10-year versus the 20-year. I like the 20-year because it's kind of a mid-range between the shorter term and the longer term being the 30-year. So I do like TLT, but you can see there's that break up in rates on the TNX. So the TNX does show rates where TLT shows prices on the 20-year, TNX shows rates on the 10-year. There's that break higher in rates. So I don't know how long the market will be okay if rates continue higher like this. I think there's going to be a point in time where rates need to calm down a little bit, but they've been very complementary to the market, if you will, going back to TLT and showing this upward trend channel. So lowering rates has certainly helped fuel those C wave extensions of all those zigzags and making it back to the February highs and new highs in the market. And I made this comment that I think is really interesting. Since the beginning of time, I've always talked about the big boys and people that criticize the equities market say, you know, it's rigged with all the big players because they have all the volume, et cetera. Well, a lot of the institutions are pretty heavily invested. They have available cash, but when you start looking at the retail trader that normally comes in at the end of a move, the FOMO, they see a headline of new market highs and they come in and they don't have the buying power. And the institutions let them push it up a little bit and then they sell off and the big volume sells and it hurts the retail trader. Well, kind of flipping the script now because the statistics show that the retail side of things has $3 trillion in money market accounts. So what the retail trader is going to do now matters to me more than ever, more than I can remember in my entire time watching the markets, which is 28 years plus. I don't remember a scenario like this, which is part of what makes trading fun because it's always different. It's always a different area. I related that to my golf career as you could play the same golf course every time, but every round is different because you're going to be in different spots every time you play. But that's trading as well. And now let's go look at the dollar. And you know, everybody's kind of joked when I said we don't want to lose the dollar. And I'm kind of encouraged by this, but let's also note that it's likely the dollar is bouncing up because rates are bouncing up, and that's supporting the dollar. I had mentioned that I didn't want to see 97.5 broken, and that if we initially broke it, it'd probably be viewed as a good thing. And that was the commentary at the end of last week, is that, oh, the weaker dollar is helping internationally commerce companies because of the exchange rate, et cetera. But if we started to get the dollar way down here, I think that would change and become a big negative for the equities markets because people would begin to wonder what's wrong with the dollar. Has the world lost its faith in the dollar as the currency of last resort? That was really going to be concerning. But with this bounce up in rates, the dollar has bounced back up. Now, it could just be we broke this support level there at 97.5, and now we're going back to test it. It acted as support. We had this channel of sideways movement in the dollar for a while, which was very constructive. But I stand by that. I don't want to see the dollar down there at 92.5. That would be worrisome to me personally. Maybe not to others, but to me. So let's see if we're just going back to test 97.5 or if we are going to move back into this. So there's a lot to watch. We need to keep an eye on the bond market. We need to keep an eye on the dollar. They could be chinks in the armor here of a continued move up to that 650 level or higher. All going to see how that plays out. So now let's go ahead and take a look at the Dow. I talked about this, and boy, it worked out. I'll be honest, I didn't trade it. I'm not a big fan of trading the Dow. I like the S&P, the Qs, and other things. But you know that I noted this a couple times that and posed the question, would you rather trade the Dow playing catch up back to its February highs because it was lagging the other markets in testing their February highs because of all this clean air? Or would you rather trade the Qs that had broken above their February highs, both of them having clean air, meaning no resistance in the way? And look at that move, straight up. And so I'm just being real honest. I noted it. I saw it. I thought it was likely to happen. didn't trade it. And I'm a creature of habit, so I missed out on my own commentary there. But when you take a look at the Qs, which is where all the action is and where I think a lot of the money is going to go from all that money in the money market accounts, I don't think many of the new breed of traders and all that money in money markets are all that excited about the Dow. I think this is where the action is going to be moving forward. The retail traders are going to trade the stocks that they know, and a lot of them reside in the Qs. So it already broke above its wave 5 high here, and it has clean air because nothing in the way, no resistance in the way. Very difficult to figure out where this wave 3 will end. My viewpoint. I've always lamented the fact that so much Ellie wave education says stay away from the wave 3 because you don't know where the wave 3 is going to end and the wave 4 is going to begin. And yet everybody agrees it's the strongest of all waves. And I've always felt, why do we want to avoid the strongest of all waves? That's a good chance to make money. And so if we find a zigzag within the wave 3, which is what we do in our AI impulse strategy at ewotrader.com, then I feel like that's a great place to trade because you do have an idea where the wave 3 will end. Well, there really isn't a discernible zigzag in this wave 3. So that does bring it back to very difficult to know where that wave 3 would end. So I like to look at the confirming indicators for an idea, and the DMI is just, you'd call that solid. It's not waning because even though the positive directional indicators moving down, if you've listened to me over the years, you know that when I see that, I immediately want to see what's going on with the negative directional indicator. So to me, it's two different signals. If the positive directional indicator is going down, but so is the negative, it just means that there's a little bit of a pause in the buying on the bulls, a little bit less volume, but no resurgence in the sellers. So if it was going down and we were going up on the negative side, I would view that differently. So it's a very solid DMI here, meaning that there's nothing there that would show that the Qs couldn't go higher. CCI, I got ahead of myself, is what I wanted to show you, more of a short-term indicator. We did have an extreme point high, and we've come back down to that positive 100 level. Maybe we need to go a little bit lower. You can see in the past, oftentimes when you get to an extreme point high, the CCI will come back to the midpoint, to the zero line between positive 100 and negative 100. But note the last couple of times that we did this, we broke down, but we didn't quite make it to the zero line, showing that more strength than you would expect. Maybe that happens again. So maybe we have a little more sideways in the Qs, and then the CCI turns back up. It could turn back up from right here as it did back in May. So the fact that we've come back to positive 100 is all that needs to happen. So obviously there's a difference between what needs to happen in an indicator and what happens oftentimes. Excuse me, a little bit of the hiccups. But so right down here to the positive 100 area is what we want to watch on the CCI, whether it bounces off that level or continues down towards the zero line once again. So just that looks great to me. It's a nice 45-degree angle. And that's part of the reason there's no zigzag is because we've been floating in this 45-degree angle. The reason I like that is because corrective moves tend to be less volatile, less severe, and therefore haven't created a tradable zigzag in there. So we're just kind of melting up in the Qs. And it seems like based on those two technical indicators, I don't see anything that shows that that might be slowing down. Let's take a look at the IWM. We had talked in the past about the possibility of the IWM moving up to 220. Guess what? We did. Now, we did close it out as our case study consideration before we got there when we had a nice move higher. But nonetheless, it did make that level that had surmised that it might up to 220. And a viable question could be, well, if you thought it was going to 220, why would you close out a trade or an idea before you hit its target? And I'm an options trader, so I watch implied volatility. So if you get a big move and you get a spike in implied volatility, I'm going to take that even if it hasn't hit the target price yet, because I've been stubbornly waiting on target prices to be hit before. And if it takes a little bit longer and the IV comes out, you really don't get rewarded for the target price being hit, even though the delta moves higher. It gets offset by the IV dropping. And really, in the end, the option isn't worth any more than it was if you would have gotten out on the spike with the spike in IV before you hit its target price. So that's the explanation there. That's why. So now where do we go? Well, I've been commenting that if we can break this 220 level with follow through, which we have not had yet, we broke it, but we didn't have a follow through day. Then I think 230 is very likely next, because that would be the completion of retracing this C wave here that extended all the way down to the 161.8% level. So we'll watch that and see if we make it back up to the 230 level. I do think that's quite likely. All right, let's take a look at what's going on in the crypto land with the BITB. And as I've mentioned numerous times, BITB, some of you like IBIT. I haven't really noticed much of a difference between the two. They both have very liquid options in them. And we had the breakout of the triangle, tested the 50-day moving average. We've come back, tested the point of the triangle, and we're right back in this little channel here that started the consolidation into the triangle, and we need to wait and see. We tried to break above 60 and couldn't do it. Again, no follow through. So back, fall back and fire again. And we'll see if that's what happens on Bitcoin. Can it try and turn and run? And in the case of the ETF here, BITB, break above 60 with a follow through day. If that can happen, they are again clean air. So there's a lot of room to run in some of these, but they got to break these resistance areas first before we can find that out. But really pretty healthy action, even though it didn't feel good when we tested the 50-day moving average if you're long Bitcoin, but immediately back up, just following the rules of these triangles, going back and testing the point of it, and still hovering above the 10-day moving average. Looking at Ethereum, if we take a look there, you can see that it made it back again, the 1-day move below the 50-day moving average, right back above it. We've managed to get back in the channel here as well. So now we're back in consolidation mode on both Bitcoin and Ethereum. I don't know what the catalyst might be to break these out, but for now, it seems like the sideways move is in play until they decide to make a significant break one way or the other. And we didn't have the triangle on Ethereum like we did on Bitcoin, but that triangle is over on Bitcoin. It's already broken out and followed the retracement rule. And so now we're back into consolidation phase here. Maybe there'll be something that breaks them out moving forward, looking at the energy space, which has not been performing very well. Natural gas back down here. Now, there has been some speculation, which I think is interesting, on the financial networks. They've been talking this morning about the heat and the energy and power that's been needed for keeping cool, if you will. And I can tell you up here in the mountains where it's normally cool at night, I made a comment that last night was the warmest night I can ever remember being up here. Normally it cools off dramatically at night, even if you have hot days. And we've had hot days, but it kind of felt like Florida last night with the fact that it didn't cool off. So a lot of energy being used. We're going to see that when we see all those companies start to report earnings. Can that give natural gas any sort of a boost? We'll have to wait and see. But now we're back moving down into that wave 5 tap box again. We got there, had a little bit of a tick up, but only back to the 10-day moving average, and then moving lower. It just feels like we're in the process of completing this wave 5. And then you know what happens when you complete the wave 5, if it doesn't go beyond 100%, which is still a possibility, but we're hanging around that 61.8% extension, we could get a bounce back up that retraces that wave 5 back to the wave 4. So maybe there'll be a bid in natural gas in the not too distant future. But once again, it all depends on how far down the wave 5 goes. We do have some support right in this area, right around 15. But if we break that, we're most certainly coming down here to 12 and a half, which is right in the middle of the tap box. And so that would mean much lower prices in natural gas before any sort of a potential bounce. But for now, we'll watch and see if somehow this 15 level can hold and you get the retracement sooner rather than later if you're a fan of trading natural gas. Looking at oil, USO, you can see that little bit of a bounce back. OPEC actually had surprised people by announcing, and you've been hearing me say that, they don't want the price of oil to go too high because they don't want to push people into electric vehicles. They want to keep the price elevated, but not too high. And they announced bigger increases in productions than most expected. And so far, really hasn't had an effect. So far, we are still moving higher in oil. I still maintain my thought of 60 to 80 is the range for the majority of 2025. We had the two outlier events here back in January, and then with the Israel-Iran war, we had a short-term spike. But I just think we're going to be right back and forth here. In the meantime, a little bit of surprise to see that move to the upside. OPEC's in meetings right now. Maybe there's speculation. I mean, they have their big meetings going on right now. Maybe there's expectation they're going to announce production cuts. That could be a little bit of a covering type trade, short covering on the bounce up today, just protecting against a surprise announcement from OPEC that they're going to cut production. Let's move into metals. We'll take a look at gold, GLD, and we have this massive triangle, and it just doesn't want to break out of it. You could really make an argument to move it there. And it's not an exact science drawing trend lines of triangles. And you've heard my commentary when people say I don't agree with where you draw your trend lines. I'm just looking at the general picture. Is it consolidating? Is it a triangle? Getting the lines drawn at the exact same point to me is like an Elliotician that gets a little bit too caught up in trying to label every single move of a market, and you get paralysis through analysis. You get so focused on getting every little move right. How do you make a trade? If you do trade, you're getting whipsawed in and out based on the minutia of the movement. So let's look at the bigger picture from what these indicators tell us. And with the triangle, it's just telling us that we are continuing to consolidate in gold, but we're going to get a move. And when a larger triangle forms, it means that you're going to get a more volatile move. It doesn't mean it's going to move further. It just means when it does move, it'll be more volatile. So we're either going to see a pretty vertical break up or a pretty vertical breakdown, in my opinion, when GLD breaks out. And what's silver going to do? Is it going to play catch up? It doesn't really have a triangle. It's just going through a sideways consolidation. It played catch up for a while. As you know, we had this big move up, and there was the AI target. I talked about AI. It gave a 71% score, which was really attractive. Personally, I like the scores of 70 or above. I think those are quite accurate. I think that's a pretty good figure in your favor. And there was the target, and look what happened with silver. It just pegged itself exactly at the AI target. So this stuff matters. And if you see the potential here of breaking to the upside, it's just a different kind of consolidation where GLD is consolidating in a triangle. SLV is just consolidating in a sideways move. Both of them yield breakouts. I just prefer trying to figure out a breakout out of a triangle rather than a sideways move. In my opinion, it's easier to figure out when you're getting close to a breakout on a triangle than a sideways move. Sideways moves can last a while. The average sideways move in the market lasts 3 to 4 months. So we could go sideways a little bit longer. But triangles don't necessarily do that when they're nearing the point. And let me go back and show you one thing that I look at here. As we look on GLD, you could look at it and say, well, yeah, that triangle's been about 3 months. But what I mean is when you see the ADX low, you're usually going to break out. And look how low that ADX is. It's nearing one of the lowest readings I've ever seen in an ADX, especially on GLD that loves to consolidate and break out. So I think sooner rather than later, we're going to get this breakout. And whether or not silver follows it or not, we'll just have to wait and see. It lagged for a while. It outperformed, play little catch up. Does it lag again? It's difficult to tell with the fact that it's in a sideways consolidation versus a triangle. So again, kind of the commentary along those lines. Let's look at the VIX. I don't want to forget the VIX. And when we take a look there, talked about this dropping down here. You get the summer doldrums, and normally it's lower volatility because a lot of people travel, they do their vacations in the summer. Typically, volume goes down a little bit. And unless something extreme happens, usually you have lower volume in the summertime. Now, with lower volume, you can get exaggerated moves. You can get more volatile moves if something unexpected happens, like another war breaks out or something that hasn't been factored into the market already, a surprise move. You can get exaggerated moves, and we could get exaggerated moves out of the VIX. But barring that, we're likely going to stay in this kind of a mode here. And just to give you a reference, we go back to last summer, and that's when the VIX just consolidated here throughout the entire summer down around that 12.5 level. We're already into July. So are we going to come down to 12.5? Maybe not. Maybe the consolidation is just going to be slightly elevated here on the VIX between 15 and 17.5. Even with the war, we weren't able to break above 22.5. So that does show you that we're in a period of normal lower volatility. But just as soon as you say that, every now and then there's always exceptions to the rule. I just wanted to qualify that if something unexpected, something that hasn't been priced in, and I think all the tariff stuff's getting priced in now, et cetera, something unexpected happened, you can get an outlier on volatility in the summertime. But normally it's just this melt up, kind of reminiscent of what the Qs are showing us right now. Let's take a quick tour around some of the other countries around the world. Start off with the folks down under in Australia with the EWA, and we are forming a triangle here. Now, it's the second time that we broke above 26, and I thought we'd go to 27, and we've come back down. We did get really close there in June, granted, but I did think we'd actually touch 27. We didn't quite get there. Came back down, broke back above 26 again. Looked like we were headed up and saying, well, maybe this time we get to 27. Nope, came back down again. And notice that we're getting a nice little triangle formation here on the EWA. So it's not a huge triangle. It's 2 points wide, but you're going to get some sort of a move here out of the EWA, and it could be either direction. And remember, there was some questions on, I wanted to expand on this with the triangles because we do have the volatility portfolio at evotrader.com, which is trading triangles. And there was a question that says, it can't be just a 50-50 move on triangle breakouts. My point is, and I don't have the exact percentages, all I'm saying is that there are educational things out there that say it's gonna ascending triangle is gonna break higher, descending triangle is gonna break lower. Somebody commented that they were told that it would break towards the flat line, which is the same thing, ascending breaking higher, descending breaking lower. And all I'm saying is that there is not evidence that shows that any triangle can break either direction. How do you figure it out? Well, people can get caught leaning one way or the other by looking at indicators, and looking at the market in general are things that people look at. Well, if the market's trending higher, it's likely to break up. No, it's not like that either. So depending on when you're doing your data collection, you might find a period of time where you think you've discovered something. Okay, when this indicator is moving up, that means the triangle is going to break up. Ah, I've solved it. I figured it out. It could work for a little while, and you get, slightly above a 50-50 chance, and then it stops working, and then you get breaks the opposite direction. I'm just saying, in general, don't try to pick a direction on any triangle. You can get caught leaning. We did have a comment of, well, I'm a gambler and I like to pick a direction. Well, it's your money. So if as long as you accept that and you view that, no question, if you get one right, you're going to make more than if you put a strangle on, because in a strangle, one option's making money, the other one's losing money. The one that's making money is making it faster than the other one's losing it, but you're not generating a gain as fast as you would if you got the breakout direction right. But you got to be real careful when you get it wrong, that you don't have a big loss in a short period of time. I think is just a bit more prudent in general. Just make it, just a good solid trade. If you can generate 30% and you're not picking direction, I think most people will be happy with that. But you have to know yourself and you have to know your own risk tolerances. But anyway, any directions coming from the EWA, I just thought I would use that as an opportunity to respond. I love it when you guys make comments and ask questions, etc. That's the reason we do the U.S. market updates. Try to create a community, just like you all have here. And this is my favorite event to do each week because of all the comments and questions and stocks that you guys come up with each and every week. So let's go look at Canada here, the EWC, and just continues to kind of power higher. Maybe we're getting a little tired here. We had looked at the DMI, that ADX is moving down. It got up to 50. It's now broken below 40. That would be your exit signal. When an ADX breaks above 40, tells you the strongest part of the move is over. Doesn't mean the entire move is over. It gave us one more leg here. As you can see, we got a little bit of a pullback, and then it had one more run, but that was even weaker. So this move is really kind of running out of gas. Seems like we're destined to create the wave 4, or maybe just a test of the 50-day moving average, but much weaker on the move on the EWC now, which really does need a breather because it's pretty much just run up since those April tariff tantrum lows. And then taking a look at Germany, it was moving higher because the ECB was cutting rates like crazy. And then it looked like, all right, they're going to kind of rest a little bit. So here we come back down. The economic data out of Germany does not support this big move that they had. They moved more vertically than Canada, was just at least a nice 45-degree angle move, a little more vertical in Germany. And it could be nothing more than there was so many people short the German market from their economic data, et cetera. But all it did was test the 50-day moving average, and now we're back up testing the wave 5 high. I would worry about a double top right here. I could be proven wrong, but it's going to have to break that wave 5 high for me to be a little bit more constructively bullish here on Germany. This just feels like the test of that previous high and the possibility of a double top and then a bit more of a corrective move there following the completion of that wave 5. If we take a look at the Nifty over in India, taking a look there, market had a resurgence after a big downward move, a very extended wave 5 at 124%. What we talked about, it's supposed to go up to 61.8. It did, came back down. Now we're moving up, and we retraced the entire 5 wave to the downside when it didn't need to do that, but it did retrace it, bounced back down a little bit, but we're holding above the 10-day moving average. We're staying in this trend channel, the one that the TLT broke out of, very similar. Basic old technical analysis, draw a trend line connecting highs and lows and see where things go from there. And so far, you have to say that's constructively bullish. Nice 45-degree angle move, staying within this trend channel, staying above the 10-day moving average, and the possibility that that wave 5 extends up here near this level around the 65 area. Can it make it that far? We'll see. Does feel like the level down here at 62.5 could be the first point of resistance, but as long as we're staying in this trend channel and above the 10-day moving average, very difficult to not be constructively bullish on the Nifty. And then last but not least, the FXI, with things kind of calming down from the rhetoric between the US and China. Maybe we continue this C wave now. We're getting a little bit of a bounce up today. So we'll see if that continues and we can complete the C wave, which really does nothing more than test the March highs on the FXI. So very similar to how all those zigzags were showing us testing the February highs on the SPY. That's what this is showing, is a potential test of the March highs on the FXI. Back above the 10-day moving average today, so we'll watch to see if we get a follow-through day tomorrow on the FXI. All right, so that takes us around the world. Metals, energy, cryptos, everything. Zach, I'll go ahead and open it up to questions at this point in time.
Alrighty, sounds like a plan. Let's get right into it. Apologies, I'm having a bit of trouble with scrolling at the moment, so let's go ahead and check out RDDT for Raphael. Can you hear me?
RDDT.
That's correct.
Reddit. All right. Take a look there at Reddit. And you can see that we had this really nice consolidation at the round number of 100. We broke to the upside. We are trying to break below that 10-day moving average right now. So we'll have to wait and see if that holds or not. Again, be looking for a follow-through day. You got to keep in the back of your mind that little gap right there. And it would not be surprising if you look at this area here, there's certainly a resistance and likely now support at 125, which coincides with where the gap was. So we gapped above resistance. I always hate it when that happens, because then it does open the door for a test of not only is resistance new support, old resistance new support, and it kind of makes that a little more likely when there's a gap there that needs to be filled as well. So in the very short term, I'll be a little bit nervous about Reddit. If you're long the stock and you can handle a move down to 125, stay with it. But that's kind of quite a ways down. And depending on whether you're holding the stock long term, if you're in an options trade, you probably wouldn't want to go through that. Just depends. And if you're looking for an entry, I would wait until we make it back above this 150 level. There's a little bit of resistance there from this consolidation that occurred back at the end of February and early March. It tried to break above it. It couldn't do it. We had the 1 day, no follow through, and came back down. So again, fire and fall back. We'll watch and see. But there is the possibility of 125. So I would just kind of keep an eye on Reddit. I don't know that I would try to pick anything right now. But again, if you're already long, take those things into account that there is a possibility of 125.
Very well. And back in order now, let's go to AMPX for Bruce.
AMPX X, not Z. X. Imperious Technologies. I have to admit, not familiar with this company. I can see where the interest is. It makes me a little nervous. It had this big volatile move and gave a little bit back. That's what happens when you get these volatile moves, but it consolidated rather nicely, in all honesty, right above this level that was resistance back in January at the $4 level, and then exploded higher. I would have been much more of a fan of this if it would have just kind of broken and run in a more 45-degree angle, because that shows accumulation by traders. It is above 5 though. So let's take a look at volume and see if that big spike, and it may have been You can see the big volume spikes here. And you know the rules. For those of you brand new, go through it again real quickly. The way the securities regulations work is institutions, investment companies, mutual funds, etc., are not allowed to own single-digit stocks. They can't own anything below 10 unless their investment objective is aggressive growth. So if their registered investment objective is aggressive growth, they can own stocks at $5. So before then, it's just nibbles here and there, a lot of retail trading, a lot of interest along those lines. But if it can get above 5, then it brings in potential institutions that may like this company and want to be a part of it. That looks like what's going on there. We got up to 5, breaking above it today on 2 big bars. And that is very likely institutions stepping in. I'm still a little bit concerned about the vertical nature of the move, but if that is what happened with institutions buying, there could be more upside to go. I don't know if I'd want to chase it today because we got a little too much separation from that 10-day moving average for me and a little too vertical. But I would surmise that if that is institutional buying that came in, if we come back down and test 5, then the institutions may come in and support it because they don't want to see it give it all right back. That means then they would have to exit at a loss, so they don't want to do that. They'd have to realize the loss. So I'll move back down towards 5. Perhaps they step in again. Looks quite interesting as far as where it could go in the future. If you are long this right now, I'd use that $5 area as a stop. If it hits the 10-day moving average and comes back, you can always get back in. But if you were looking for an entry, I think I might just wait a little bit longer and see if you don't get a test of that $5 level before stepping in on a potential move to the upside there.
Thanks, Rob. Let's head over to Tesla for Will.
Well, they're mad at Elon again. The war of words between Elon and President Trump and the threat to start this new party, American Party. Basically, what he's trying to do is snafu the Republicans by just targeting a few seats to take away the majority, because it's a thin majority in both the Senate and the House on the Republican side. And he feels like if he can just win a few seats, then he can take away their majority. Why he's so intent on doing that, I don't know. I thought some of his initial rhetoric in fighting with President Trump was just to win back some of those people that got angry at him for his involvement with President Trump and Doge, etc. Well, now it's back to the same thing. Now people are upset that maybe he's getting distracted again. That was what they were upset with before, that he was spending all his time in Washington and doing all the Doge work, et cetera, and he took his eye off the ball with Tesla. So as soon as people were feeling better that he's back watching it again, we got a rebound, and then this. And so the same thing is starting again. And basically, you look at this triangle, there is going to be a big move in Tesla. And we got breakout attempt that so far hasn't had a follow through day. This is looking, if that is going to be part of the lower trend line of the triangle, that means that we might go sideways a little bit longer here before getting the breakout. But that's a pretty decent sized triangle there. So call it 260 to 360. It's about a 100-point move in Tesla. That's significant. That's likely going to occur in the not too distant future, and no idea which way it's going to be, but I would be watching that one closely for a potential breakout move. Very expensive to try to do a strangle on that, so I would just keep an eye on it and see. It got really close to looking like a downside breakout. Just didn't quite take out that low there where the arrow is. Let me put the crosshairs on it and tell you exactly what day I'm talking about. The 9th of June low. It didn't quite take that out. So you could still technically say the triangle is forming, or you could look at it as, well, it tried to break out and maybe it's testing the lower trend line. Um, Regardless, that wasn't much of a move, and there's still a big move to go from Tesla. It's going to be really wild to watch and see what direction it goes.
Yeah, expensive strangle indeed, but perhaps a lucrative one if you have that account size. Let's head over to Rocket Lab RKLB for Lisa.
People have been asking about this one a little bit more lately, and nice breakout there from a long consolidation area. We consolidated in this trend channel back in the beginning of the year, into last year, beginning of this year, broke to the downside, consolidated again, broke back up, right back into that same trend channel, and now we've broken out of it. Wave three here. You could probably argue that there is a zigzag in this pattern. Uh, you could call this the high, and that we have a complex zigzag because it went right to 38.2, and that's showing you that we are getting an extended C wave level there. And that's where you would expect the extension to go. 61.8 was the first level. And then that stuff we talked about during the um, Zig-Zag masterclass that we did a couple weeks ago. And I would want to see what the DMI looks like. It looks pretty strong there, like there's likely some more room to run, even though it is telling you that continued move higher will not be as strong as this move from 30 up to 38, but it could continue higher. We're a little separated from the 10-day moving average, so I don't know if it moves over the next day or two, but there is a chance based on that chart that we could go up at least to this 138.2% extension level. It's done a good job of kind of backing and filling these more vertical breakout moves. So, barring the market correcting significantly, um, it's an aggressive trade because it's extended already, but it does just feel like there's a potential for it to move higher. And then when you look at the CCI, that's what we were talking about earlier with the move down. It doesn't have to come down to the zero line. Once you have these extreme point highs, usually comes down to at least the 100 level, and it's trying to tick back up again in today's move. So there might be a little bit more to go there, but I would have my stops in mind in case it starts to reverse because it's a little bit extended. So it could go higher, but a little bit extended.
Very well. Next up, we have a question from Art who's asking if you would follow SBET by tracking ETH or by its own thing as a normal stock. Cheers.
Uh, SBET.
That's
Um,
correct.
so if you would track it by, I'm sorry, can you repeat that?
By ETH or if it would just be on its own.
Well, I personally don't like this kind of stuff, so I think the answer to that is going to be a personal preference. You're not going to see this kind of move in an ETH. Never going to happen, and that's what happens with the ETH. ETFs. Um, when you look at this kind of a move here, and there was some great numbers out of Macau. I don't know this company specifically, but I'm assuming it's something to do in gambling, right? Sharplink Gaming, or is this more like video games type thing? Sorry, I'm not super familiar with the company, but that smells of the meme crowd there, um, creating a move like that. So, yeah, an ETF is not going to give you that kind of a move. But if you like the space, you would go with the ETF. If you're looking for some sort of a wild move and think that maybe that could happen again, you'll never see that in an ETF. So I think that's a personal preference. And if you did want to play in this space and look for some sort of a big move like that, it would need to be very speculative money because it's risky when you start fooling around with that. I mean, it was on the pink sheets forever. You can see with the lower dollar price before it broke up, and it's at 15 now. Let's see what the volume looks like. Maybe there's some institutions that are stepping in here, either that or it's created some short covering from people that shorted that big move to the upside. That could very well be what happened. You might have had some institutions step in on this big red bar and short it down, and now they're covering the shorts following the big move to the downside. Institutions love to watch stuff like this, especially they watch the social media like we have here on the Hub platform. They look for what are people looking at? What are the posts? And when they feel like they can step in and overpower the retail traders, they do. But anyway, um, don't have much else to say there other than if you want to play in that space, make sure it's speculative, discretionary money that you're using because those wild moves take an iron stomach.
No doubt about that. And you're correct in your first assumption. It's in the sports betting space. And
Okay.
Art added
Yeah.
that
So
they
go
have the
ahead.
holding of Ethereum. So that was the context there.
Oh, okay. I understand now. Yeah, and yeah, I do think Ethereum may be coming back from the dead, but I think you would want to have that as two separate things. I think you could look at Ethereum from its own animal, but I do like the current gaming sector because the numbers out of Macau again were very good, and I think that entire sector can be moving. So you could play ETH for Ethereum and the gaming sector ETF. So how about that?
There you go. Next up, let's go with QFIN for AV.
QFIN. And again, that's why I love this segment every week because you guys come up with stuff that I don't look at often. Well, all I can tell you about this, and I'm going to look at the DMI, that is a really well-formed triangle. That's the first thing that I see there. Is something of significance is about to happen here. It's pretty well formed. There are better ones, but not a whole lot better. Yeah, there's a little open space here and there, but it's spaced out well. And I like symmetry in the patterns, as you know, if you listen, and that has a lot of symmetry to it. And I want to see how low the ADX is. And yeah, it's getting down below. So as you know, when the VIX is high, when the VIX is above 20, I use 15 as the level. When the ADX breaks below 15, I look at it because when the volatility is higher, you don't often consolidate as long. But if the VIX breaks down below 20, then I prefer to see the ADX move below 13 as a kind of a sign of getting close to a potential breakout. Well, it's below 13 and the VIX is below 20. So it does look like something's going to happen here. I don't have any idea what the option liquidity looks like on this. If it's good, that looks like a great looking triangle to me. And if the option liquidity is not good, I would keep a close eye on this. Look how close the 10, 30, and 50-day moving averages have been for a while. I think that's going to change. And I don't know if it's going to be this kind of breakout right there or that kind of breakout right there, but something like this or this is likely to happen very soon in this stock. So, yeah, you're on one that could really move. But know that there's no way to know in this stock which way it's going to go, but it's going to do something.
Yes, indeed. Very well. Thanks, Rob. I see we are at time. So if you want to go ahead and post or just provide your analysis on this week's case study consideration, whether it be an idea or a post, go ahead and feel free to proceed with that, and we'll ensure it's posted right after this session is over.
Yeah, we're going to follow along with kind of what I mentioned earlier. with the power that the retail traders hold now, unusual trading strength with the amount of money that is in money market accounts. I like the movement here of Palantir. I know it's a favorite amongst the retail crowd. You'll ask about it all the time. I like this test level here where we tested the wave three for quite a while. We broke up, we came back, we held 130, which is just one little tick above that wave three. So that created a higher low right through here. So again, kind of going old school technical analysis. We have a pattern there of higher lows. Granted that Palantir is a little bit more volatile than your typical stock that marches up in a trend line of higher lows. But I think we're going to test 150 on Palantir. So that's going to be our case study. We'll go ahead and make that one an idea, Zach. It doesn't follow every rule, but it follows enough of them that we'll go ahead and do that. And it's following more the CCI here than the DMI. And that's why I'm saying it doesn't follow all the rules. We take the DMI off, and you can see this is what I like. I do prefer when the CCI is a good example of what I was talking about earlier. When you get these extreme point highs, you like for it to come back to the zero line. It actually broke a little bit below it, so it would have been considered, a tiny bit bearish, even though it made a higher low. So that's divergence. And nothing in trading is 100%, and this doesn't even follow all our indicators, but I like it enough that we give that one a shot and see what happens.
Alrighty, sounds like a plan. Well, we'll have that posted here just a few minutes after this session is wrapped up. So I'll pass back over to you, Rob, for closing thoughts. And thanks everyone for joining us for the first session back from the holiday break and week that we had.
Yep, sounds good. Thanks, Zach, for being able to tune in while you're away. And for everyone, echo Zach's sentiments. Hope you had a wonderful weekend. Probably hot, lots of fireworks, but we'll see if we have any fireworks coming out of Washington again. Kind of put things off till August 1st now. And I think that was done due to the fact that what they would really like to do is announce a whole bunch of these trade deals between now and then. Takes time to work on them. That's just my guess and supposition. Obviously, no inside knowledge there whatsoever. Trading along with the day-to-day craziness along with everybody else. But let's see what happens over the next couple of weeks. And probably not going to be a typical quiet July. I wouldn't think, with the expectation of the Fed meeting in July, along with the August 1st deadline coming, and we could see some interesting things. So I think the VIX stays a little bit heightened is what I meant to say. So with that, send everybody back to their trading day, and look forward